Your views, your news, your Limerick Today with Joe Nash on Live 95.
You'll remember the governor of the central bank was in the studio a few weeks ago, and he was confident that we would see an ECB, European Central Bank, interest rate cut in June, and he's on the board of governors of the ECB. It has come to pass, and to talk more about it and what else we can expect, Brian Forde from Rockwell Financial is with me. How are you, Brian?
I'm good now, yourself?
So what does the recent 0.25% ECB rate cut mean for the average consumer?
Yeah, so again, firstly with the ECB cut, as you said, it's been cut by 0.25% following the 10 rate hikes we had over the last couple of years. So with the ECB rate, there are actually kind of three main ECB rates. There's its financing rate, there's a marginal lending facility, and there's a deposit rate. Now, the one that has the biggest impact on the general consumer is the main refinancing rate, and that's what, I suppose, affects the rates we get on loans, whether that be mortgages or personal loans. So in terms of the impact that it's going to have on people, let's just say with mortgages, who are probably the people who are hit heaviest by it over the last couple of years, the people who are initially going to see some change in their mortgage rate is those on tracker mortgages, because people on tracker mortgages, their rates are intrinsically linked to that ECB rate. So they will see a reduction in their mortgage payment in the coming weeks. Now, obviously, following a significant increase over the last couple of years, but that will mean a decrease in their payments in the coming weeks. Now, for people who are on variable rates or fixed rate, there won't necessarily be any change immediately. So banks are not obliged to reflect the lower rate in their variable rate or their fixed rate offering. So it's ultimately going to be a business decision for them whether they pass that rate saving onto consumers. Now, the government is pushing and for them to do so, but the banks have come back in their stance that they didn't pass all of the interest rate hikes onto consumers. So the indication is that banks moving in step with the ECB isn't given at this point in time. So in terms of what the impact's going to have for people with tracker mortgages, they will see a decrease, but for everyone else, it's very much a wait and see kind of thing over the coming weeks.
And we know there's a technical change coming in September of 0.35%, and that will impact those on tracker rates as well, and that is going to happen for certain. But the doubt now is about more general interest rate cuts. We saw the Fed in the States last night saying that they would not have as many interest rate cuts in the US because they're worried again about inflation this year as had previously been indicated. It feels likely that the ECB are going to be very cautious now compared to what we thought at the start of 2024.
Yeah, I agree. So the ECB have always been very non-committal on this in, I suppose, comparison to the US, which are very kind of bullish, I suppose, on 3 cuts this year. And that hasn't happened because inflation's proving to be stubbornly in the face of the interest rate increase over the last couple of years, and the Fed in particular are kind of baffled as to why it hasn't had a bigger impact on the US economy. But for us here in Europe, the ECB are taking a very much a data-driven approach to this. So with kind of further cuts and how much they cut the interest rates by, it will very much depend on how things react in the coming months. So September is a big month, as you correctly said. So I think the next 3 months will tell a lot, where they're going to see how inflation responds, how labour markets respond, and how economies in general respond. Because when it comes to decreasing interest rates, it's very much a balancing act. Because if you don't increase them enough, you can, if you increase them too much, you can, I suppose, stifle economic growth, and you can plunge into recession, which is obviously we don't want. But then on the flip side of things, if you don't decrease them, then that obviously has a negative impact for everyone else. It's very much a balancing act, and it's going to be a data-driven approach for them over the coming months.
Yeah, and look, they would say it's taken the heat out of economies around the Eurozone, including the Irish economy, which could well be overheating at this point were it not for these 10 rate hikes. But the one thing to point out is, if you are falling out of a fixed rate right now, you can shop around for sure and see the best deal that you can get. But the truth is, you're likely to end up paying more even if you fix again, aren't you?
Yeah, 100%. So for people coming off fixed rates onto variables, if they were to fix again, as you correctly said, if they're on a 3, 4, or 5 year fix, the rates are obviously significantly lower at that point in time. So fixing again for a lot of people may not actually be the best move for some people. So I'd always recommend people in that position speak to their bank, speak to a broker, because a lot of people now are sticking to the variable for a period of time just to see how banks respond to the decreases that are hopefully going to come in the coming months. So it's very much a get advice situation. Right. But yeah, it's a good point.
So are there any rates out there at, be they fixed or otherwise, at 2.75%, or are we dealing with 3 to 3.5 as best rates in the market?
Yeah, so unfortunately there's nothing kind of sub 3 at the moment. So for people out there who say just want to do a bit of research, there's some very good comparison tools out there. So the CCPC mortgage comparison tool is very good, and that way then you can type in your house value, your loan and things of that nature, and it'll give you the best rates available. At the minute, the kind of lowest rates are coming in at around the 3.5%, up as high as significantly more than that. But the best fixed rate at the moment is in around 3.5. But hopefully we'll see sub 3 now in the coming months if there are further decreases.
All right. Well, listen, thank you very much for that. It'll be fascinating to see what happens. I'm sure we'll be talking to you again, and we will see what the ECB does. But certainly the chat earlier in the year of a number of rate cuts, I think we've done well to get one. As I say, there's this technical one which will have a positive impact for people who are on tracker rates in September. That will happen. But more general interest rate cuts, there's more doubt now because of what's happening in the States and the data that they are looking at, the ECB across the Eurozone as well. But thank you to Brian Forde from Rockwell Financial, and we look forward to your expertise later in the year.
Your views, your news, your